Yeah, so the 78.6 is right here to that 5,000 mark. I don't, and I don't, I mean, where we at? 5,069 was the low. So we're talking 69 points. So where we could have, I mean, I see that we should price will bounce. And premiums are so elevated right now. It is just, I mean, the best way is definitely the futures. You don't have to worry about paying crazy IV, or you have to suffer the Vega. But some of you guys don't have the futures the accounts. You should just simply apply for one. I mean, if you have spreads which you can trade, you should be able to get a leverage account. So future does it's risky, so don't be too crazy about sizing up those mini. I trade mini, not the standard. Standards on like $25 per point. You can So I do mini, which is the same thing that you can just do one contract. I mean, you're talking like what, 4 points? That's $100, you know? As yeah, it's just it's not it it's expensive and it's dangerous as well because you gotta have to you must use a stop loss on the futures because you could literally flush out the account. You know? Because the good thing about, I mean, the good thing about the option market is, let's say you pay a $5 debit, that's the max risk that you have on a trade. You cannot lose more than $500, right? So, but on the future market, 500 is like what, 25 points. I mean, Mike, I mean, we're talking 300 points drawdown from the last 2 days. Imagine like do the 300 times 25 for one contract. It's if you gonna get lucky catching the entire 300 point move. Yeah, it's huge. But if that thing goes against you, if you buy something late night at 3 o'clock in the morning because you're up, you couldn't sleep, and you just say like, okay, I'm just gonna wait for the New York session, and then 5 o'clock in the morning, those futures are already down 250 points. I'm kind of a massive hit that you can take on the position because you didn't set up a stop loss on it. And so you got to be very, very careful if you trade futures. Because very leverage positions are very dangerous. They could they could flush out your account. That's all I'm saying. So that's just like more like a what you call like a desperate trading that you're just dying to trade, you know, trying to catch a falling knife. So options at one point definitely worth it because you have defined risk. You know exactly what you paid for the trade. So if you paid $2,000, that's the max you can lose is $2,000 per trade. If you know, if you're gonna the market is gonna have that any kind of a flush out. But the point is like, people are trying to dive into a defensive and this and this. You have a market that is coming down over 2,000 points. None of these defensive sectors is going to work. Okay. There's no stock is going to rally on a 1,000 or a 1,500 or a 2,000 point drawdown because those defensive companies, first of all, don't even have enough market cap to move the sector. One point. Second thing is this, the consumer staple stocks and all these, these stocks have a very low ATR plays. Okay, so they move like 2 points, most like 3 points on average per week. Okay, so you have, to move toward the defensive side, you have to pump a lot of money into those positions in order to catch a 2 point move. You have to look at that way as well. So energy was like how energy got hit hard, yeah, yesterday as well. It's just, he's pushing everything down and just to making everything making everything cheap as possible. But if prices are down, nobody's happy. If prices are up, everybody's mad. You know? So it's just time to raise some chicken. Yeah. Yeah, I mean, if you know, the thing is this, we have the US dollar, okay, the currency is just, yeah, we go to to another country, it depends, not like not in Europe. Yeah, well, you can feel like you can live like, as a king. There's no doubt when you do the exchange rate and stuff. And yeah, you could definitely live like a king. But not like, like when you go to some of these European countries and stuff, they're not cheap to, you actually spend a lot of money over there. Now travel to Switzerland, try to stay over there for like three, for a week or so. That's gonna cost you like thousands of dollars. So this is, I mean, that's how the month is. I think the 5,000 print, that which is the 7, 8.6, with this stuff, that's the level I would get be, we should watch really, really, really closely next week. Year to date, everything is down. I mean, there's absolutely doesn't make any sense for anything to rally now, anyways, for this kind of a drawdown. Um, the Tesla is leading the pack since the beginning of the year. Nvidia down 30, Apple 25, Google 23, 22, Microsoft 14, Meta 13, S&P is down 13.73 for the year, which is right there. And then Netflix is 3.98. So Netflix is going to be, I think Netflix is just going to buy a little bit more because their earnings are coming up. So Netflix is always the first one in Mag 7 that report earnings. Technology-wise, XOK over 20, 21. Consumer discretionary 18. This is where all the retailers are. Industrial 10, communication almost 10, financials 8.5. Well, earnings coming next week. Energy 8, materials 7, real estate 4, healthcare 1.66, utilities, and this is a defensive sector right there. The bottom three: healthcare, utilities, and consumer staples. I mean, they're flat, so they're not like going um, opposite to the S&P. Trading is all about finding alpha. That's what makes us money. That's the only thing that I learned. You know, alpha is is everything basically. We're looking for an expected move, and that if our direction is right, either going up or down, is what pays. Small alpha, like small ATR plays, are very difficult to fight. You know, I mean, all of we traded what Chipotle, right? Chipotle, like after Dave this and this, I mean, it managed to finally got a bit of a bounce right back to the 50, what, 51 or 52. 52 is what I set the target. So 52 just, I mean, Chipotle used to be about a 2000, $2,000 stock. That's a stock that used to move 100 to 150 points on a weekly basis. So now the stock is trading at what, $50, $47. So once you cut a stock like this, your alpha is gone. The ATR just down to like 2 points, 3 points. I mean, it's a $50 stock. Well, how much you expect the stock is going to move? 10 points a week? You know? So it's very like like hard to fight lower ATR plays. I've learned this thing a long time ago. Plus, you gotta size up those trades so big to get paid. Like, okay, if it's a 1 point, if you have an ATR of 3 points, if the stock goes up 1.5 point, like 1 point. So if you have a hundred deltas on your trade, you get paid only $100. So if the 3 point ATR for a week expect turns into a six, that's when you hit a jackpot. That's what you got a big, huge move to the upside for on 1 week. But it's just not what. So basically, if you look at, because that's what ATR stands for, is average true range stands for the ATR. So if the average is only 3 points, 3 points for 100 deltas, $300. So these trades, the the ones that has the volume, they're the ones that move. Stay trades like Tesla. Tesla can move like 40 points in 1 week, 50 points in one. So this becomes more volatile. So you always just make sure you always watch ATRs on a weekly basis. That gives you a pretty good idea, like what would be the expected move that I could expect for a stock to, the stock can move for based on 1 week. That's a one standard deviation move. So if the stock can make a two standard deviation move in a week based on some good news or whatever, yeah, that's a different point. But your average is a 3 point. So if the stock can pop 6 points on Monday on some sort of a news, by that time, because it's still, because now you have a two standard deviation move on Monday on one single trading day. What do you think it's going to do for the next of the 4 days? It's just going to consolidate. It's going to go right back another 3 points and just going to close the week. That's what happens most of the time. Stocks don't move more, makes a three standard deviation moves on a weekly basis. There's no such stock moves like this. I mean, if the stock has a massive earning pop or a drop, that's a different thing because that's just reflect based on earnings. But based on a weekly, that's mostly the expected move. You just take the high, and just count 3 points to the downside, or you can expect the 3 points to the upside. So it depends which direction the stock is going to move. So, I mean, the month is down. 5,000 is the number that just really kind of showing me some sign of life for this for the selling to stop. You know, I mean, looking back at the weekly time frame, we look at the weekly bar. It's crazy. It's huge. 13.11 here, 11 here, 11.86, 9.67. So this swing right there from the top, whereas 17.6, 21.8, 15, and 23.4. So just this bar, this week right there, if we if you just look at them, you take this high, basically, yeah, basically. So you're talking one, two, three, four. I don't know how many. Yeah, the best way to do is 11.86 here. This is close. I would just put it right there. So if we put here, so you measure this high to this low, which is 11.86. Now you take this high to this low, okay, to this low right there. What, so take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's 12. There's a 12 weeks of move got flushed out in one single week. You know? 12 weeks. Look at the size right there compared to the previous ones. Crazy move. All because of tariffs. Nasty close yesterday, to be honest. This one managed to bob. It was so funny yesterday. I remember I was even typing that thing. It's like I'm looking at. I don't know if you have anybody noticed. Like yesterday, I was looking at Russell 2000 index was literally dead. Wasn't even. I don't even know there was any bidding going on that for like 45 minutes. It just literally stopped. Then when you looking at Dow and then you're looking at Nasdaq and you're looking at S&P cash, they're like pressing down, just sitting flat. That's what I was like, writing the math. Like, look, Russell is not even moving. It just literally put a pause on it. There was no bids. It's crazy, like how some of these algos work and how is just things move sometimes. It just completely like. So like, okay, fine. I was like looking, but I was like, is it moving? Is there like something wrong with the price or something? Then it finally ticking like couple cents up and down, but not even, wasn't even moving. And then S&P is pushing all the way down here like this. But uh, um, go back to the daily time frame. You see the swings are all down. You know, I mean, it's all about now. See where is the the bleeding will stop. I mean, RSI 10.96, 11.46, 12.79, 11.8. Well, it's not going to zero. You all know that, right? I mean, the market is extremely oversold. Okay. And that's one thing. And second, the weekly RSI, look at this, 8.34. I think it's even lower than COVID now. It's COVID right there. The COVID was, 8.20. That's the COVID low right there. And we're at 8.34. RSI has never gone below. This is the weekly RSI anyways. So we're right there. I don't know. It's just if this thing reverse, which it can, because we don't know that. I mean, it's gonna be one of them nasty rebounds to the upside. But I don't know what the odds are. Odds are very low, right? Is this, but the price could recover back up. It's just, it will, of course it will. But this just the point is like this is an extremely oversold market. That's what I'm just saying. It's like I'm gonna be just we just gonna be we're gonna be watching 5,000 levels really close because we have a very low RSI and we have 78.6 at 549.95, which is let me just make it 5,000. 5 point really doesn't make a big difference. So we're gonna watch 5,000 really really close. Um, Market don't stay oversold for too long. I will tell you that. Mm, This market can stay overbought, Our market is just not gonna stay. If you don't have, yeah. Well, I know the COVID was the the COVID was the pandemic is just when the Fed came in, but like he, right now is all about the tariffs, right? So it has market has a lot of liquidity. So Fed doesn't need to step in and to rescue the market. Market can handle it. Market has a lot of liquidity. His the point is like the market will reverse if he backs off from his policies, which he's not going to do it, as you all know that. He just wants the world to bend on their knees and kiss the ring. So there's 5 countries already did it. So now that it will make him a hero over the weekend, like, yeah, now the start companies are start bending on their knees now in front of him. So whichever country is not going to do it, well, market will eventually absorb. Well, the tariffs news is going to get baked into the market at one point. It's taken way too long because remember, markets are forward looking. You know, so I mean, look, we all know that there's no such thing as going to fall straight to the straight line, right? I mean, yeah, it's been a very long time. The swings are still down. It doesn't mean they're still never going to go back up. Of course it will. Always does. But catching a falling knife is always dangerous. And, but we just, I would, I mean, looking at daily time frame, day to day move here, and, the weekly right there, which is all false tiles here. I mean, the market has trying to made several attempts for the swing to turn up, okay, but it keep failing. It just where am I? So we just keep like look right there. That's the low, higher bar, higher bar. Look what happened the third day. You need 3 higher bars for the swing to turn up like this. You see, that doesn't count. Then the next day come, higher bar came again. The swing's gonna stay down. It's not gonna go up. You need 3 higher highs. So this attempt was failed right there. That's when this low was put on a 5500. And then this one right there, 5488, higher bar. Market was trying to make a move on Monday. This is Monday and this is Tuesday. Sorry, this is Monday right there. This is Monday, Tuesday, Wednesday, Thursday, and Friday. That's the whole week. So market was trying to push to see if we could count Thursday to the upside to make the three, the swing will turn up like this. But no, we gapped down 3.5%. We gapped down another 3.5% here. That's why it doesn't count. I was really hoping that, okay, fine, we have two now. Just need one more high for this, for this line it was sitting right there at this low, for this thing to turn up. But this is where the Liberation Day announcement came. Remember what futures was up. As soon as he pulled the chart, that's when everything reversed. The minute he pulled the chart out of that little whatever wherever he was standing. Well, Can we expect a higher bar on Monday? I don't think so. That I don't think it looks like one because we need a huge move. I mean, unless we manage to hold the low and end the day with an inside day, that's a different thing. So we don't know how. Never know. We could gap up quite a bit. But the point is, like, I just wanted to make here is the any bounce for this month is not going to start a trend, okay? Because we still need 3 weeks for the weekly to turn up. That is down anyway. That's 3 weeks. And the the only thing right now, what I see is to first to see where the bleeding is going to stop. The selling will has to take a pause, and it will. And then we'll see where do we get, the bounce, and if the bounce is gonna is gonna hold or is gonna give you a couple shakeouts. So the gaps that we had down, sort of like 3.5% gaps to the downside, they're gonna get filled at some point. Okay, so it's just a matter of time. I will be watching 5,000 level really closely next month, next week, which is the 7, 8.6. Going back to this wave counts, I think this is the best. I don't really spend much time doing Elliott wave on during the session, but yesterday I was like, just let's go back here and just take a look and see if we can make this thing. What are we looking here on the wave count? To me, this is a completed five-way move off the 2022 lows. Okay, so we have wave one, down in two, up in three, because I have this three on the top, as you all know that before. So this three was here. I was trying to see like if this fourth wave, this blue, can manage to go a little sideways or do some sort of a complex or whatever correction, the might go into a fourth wave. And then from here, we'll look for one final push back to the upside of this five of this green one. That was my original plan, you know? But looking at this decline here, because there is no, well, if you talk about a 20% threshold bear market, that doesn't stay in a fourth wave. Those are always second waves. Okay. This wave count here makes the most sense. This is a completed five-way move of the 2022 lows. So what is the three down? Remember, Elliott is very fractal. Three down, five up, three down. What do you think is going to happen next? Five up. This is a repeating pattern. There's no rocket science behind this from the last since 1930s. So this is complete, a three-way move. Can this be a three-way move? That's what I'm looking for now. Unless it turns into because your wave two on the higher degree, it could be a flat, it could be a zigzag, it could be a complex. It could go either way. See, here we have a diagonal three-way bounce, another five down. So this was a zigzag. Five down, three up, five down. So in this case right there, I mean, it's just so difficult to count this thing as a five. I put it as A here. This is a three-way move. I would have to to really, because corrections, it could be a, we can go here in a smaller time frame here. Now, while we're just looking at this high to whatever the current decline is, to me, this is looks like a three-way move. Why is this? Is because it's very hard to count this thing as a five. Okay, so it really doesn't matter. Okay, so if you make this thing as a five somehow, then three up and another five or another three, because you're flat and a zigzag, they're exactly the same position except for the Y wave. Okay, so it's just a matter of like if you really want to follow a flat is an ABC, ABC, and then you have a C wave. Okay, and then in the on a complex, you have A B C, A B C, and then you have another A B C. So it's basically a bunch of zigzags. So the only difference is the Y wave that subdivides into a three waves as a zigzag instead of impulsive action, which is C is always in an actionary wave instead of a C, a five wave to the downside. So it really doesn't matter. I mean, it looks like a five, or you want to call it as a three, because you can simply put an A here, count them as a five, three bounce, and then you got another five, which is one right now. So if this is the case, okay, if this is all off a WXY, now that one WXY, this, and now the question is this is going to be all of the correction, that we're just gonna see, or if this is gonna turn into a W. So basically, what is gonna be? This is gonna be A, B, and C. So what do you expect from here at three-way bounce back in X? That's gonna be another A, B, and C. Then you take another three down into a Y. So that's your corrections. Okay. We don't know that. So day by day, the price is gonna keep, that more and more is gonna come here. Then that's how we're gonna adjust these decline, or how we see it to the upside. The point is the damn floor. We need to find a floor. Okay. So whatever the floor is gonna form, I can always measure the upside right away. That's not a problem. But with the whatever the low we had, that has to hold. And the low will hold, or you can actually call a low, is when you have something like this off the lows. I always tell you this thing. And this can take a day, it can take 2 days to for this market to give you the eight swing to the upside. It will happen. It's something like, you see, this is the low. One, here's your eight swings. You see the market pushed? Eight swing move. Now from here, what you need is this, what you need, a continuation to the upside, not to reverse back down to take out this previous low. That's where the trend starts. That's where the reversal happens. So I'm not, the point is like, it's not like this is not going to happen. It will happen. Okay. But first, the price is gonna put out a low. We don't know what the low is. So yesterday I was watching, and just to see how the price. This is a pretty strong fib right there. It's like two six. Got a 20-25 point pop right there, and just came, and then the price came right back down. So now the point is like if we take this high to this high, projected to the bottom right there, this is our channel right there, which is I'm gonna keep it the way it is. Okay. So because any mean reversion is gonna come back into a play, it's where the price is gonna go right back inside the channel. We don't want to move this channel now. I'm gonna leave this channel the way it is. I know how channel works. If you had a throw over here, you can have a throw over here as well. It's just a matter of like how much time the price is gonna take out of the channel. Is gonna come, is gonna hit this, back off, but the price will go back inside the channel. I will, I will guarantee you that. Okay, so it's going to be a couple of shakeouts around here, but the price will make the mean reversion back inside the channel. And then the Newton law is, you all know that when you had this throw over here, you expect an equal reaction back to the upside. So the point is like these 3.5% move gaps that we have, this is the little one back here, is going to get filled at one point. It's a matter of like, are we going to fill this month or are we just going to fill next month? You know, these are these are huge gaps. I mean, this is 3.14% gap, and this one is 1.93% gap. So you have 1.93 plus 3.02. You have a 4.95% of gap on this drawdown. That makes half the S&P for the year. You know, God, man, if we could, I don't know. I mean, there's no signs because, thing is like, I don't have any buy signals yet. That's another algorithm kind of thing that I follow. And just to keep an eye, always keep an eye on to see if some buy signal, we don't have it yet because the price is making lower lows. I mean, if something trying to price recovers and starting to move back up, something like this, then we start to count like five up and then kind of like three down, and then we can see like, okay, yeah, I can see like, yeah, we have higher bars, swings have a potential that might turn back up. That's what I was. That's what I'm planning to size it. That's how I like to size the trade up is to when swing turns up. This is why I'm always watching the where the hell this daily time frame. The swing turns up here, then the wave count is gonna work side by side. There's no question here. I mean, it's just where this bleeding stops. That's the question right now, but which nobody knows. We're going to 4,800. We're going to 4,500. We don't know that. I mean, you can sit and assume anything you want, but but we just need to see what the upside that we can expect. Now, if there will be a bounce for a week, a couple days, or whatever the thing is, these are the numbers you have to watch. 5477 on S&P, which is going to be 547 on the SPY, 194, 409, and then 458. These are going to be your bounces upside. Kangaroo market, yeah. This is going to be a minimum, so you can just mark these ones down. But the point is, the challenge always is to find the floor. I can see the upside. Monday, I can buy a 195 call. I can buy a 410 call. I can buy 458 calls. I can do that. but we don't know where the floor is. You know, I can easily make a 10-point spread here, 10-point spread, you know, it just to target this is the 5 MA, which just be on a reasonable side. Like, okay, what we if the market will make a bounce or whatever, I mean, that, yeah, what's gonna pay us, what will be the you know, beside everything else, you know, whatever the VWAPs and all those stuff that you if you follow those, what would the expected move or the price would go and hit the wall. Just consider this print. That's your upside target right there. So it's changing on day-to-day basis. It's all because if the price is gonna making lower and lower, this number is because this MA is coming down. So this would be the potential. I mean, I'm not gonna make a 5,000 and 400 point wide spread. It's gonna cost me almost like $7,000 to make to. It's not gonna have. It's still gonna have like 15, 16 deltas, you know, on the S&P, but it's gonna cost me almost like 6, 7 grand, even more. You're making a 400 point wide spread on S for on an index, which is a 5,000. You know, with the capped IV at 100%. Every spread right now that you make to the upside or to the downside, you're gonna pay more and you're gonna make less because the options has fully priced in. You know, the premiums are at 100% right now. If you look at an S&P, I think how they closed the week yesterday with these premiums, S&P Monday showing an expected move of 208 points. 208 points on Monday alone. So by next week, which is the 11th, S&P showing an expected move of 346 points. It's gonna come off. That's what I'm saying. This the volatility because the IV is at a 100%. I know that. I just need to find. I'll buy a call. That's not a problem. I just don't know where the damn floor is. You know, I just need. I don't have any buy signal.
So, Mo, in that case, is it better to buy shares?
Yes, 100%. You don't have to deal with any premium, the Vega or time decay, you know, just simply own shares. That's the best way to do it.
Or or like a triple leverage ETFs like a TQQQ?
Those ones have very high IV as well. Those are not cheap.
But those, triple leverage ETFs, they don't have time decay, right?
ETFs do. ETFs do. Anywhere you're gonna pay premium that has time decay, of course it does, because
I
then
mean, the
it has an
shares,
expiration date as well. Just
like a
like it's gonna.
TQQQ shares, it's not.
The bounce. See, the thing is this: when we have such an elevated volatility, your bounces is gonna be shallow. That's the only thing. That's the thing we all have to consider as well. It's gonna be shallow bounces. This is a 100%, okay, third wave. Every time when you see acceleration gaps, it always forms in a third wave. Always remember that. Any third you see right there, third wave. Third wave. Third wave. Every time when you see like one or two session where the stock popped with the gap, and if you're trying to label a wave count on your own, that is your wave three. Either it's going to part of a correction or it's going to be a part of an up, a motive wave going up or down. No other wave is going to give you a you could have a small gap. That's different thing. That's different. When you have like some sort of a big huge gap at the open, that's 100% third wave, because third wave, it travels fast compared to any other wave count and any other wave. So I'm just like, this is what I was looking yesterday. This back to back gaps right there is just, I was like, this is definitely some sort of a, I wouldn't even go down too much damage, to be honest. I think market just gonna find a floor somewhere around here, right in this zone. I don't see monthly candles are going into a 15-16% range. That's the most I could make a call toward this 49. No, moved around this area. You all know that I called the 2022 low as well. Not exact low, but I laid it out, this part right there, well ahead of anybody can even think of. Keep that thing in mind. Elliot is the beauty, to be honest. If you could, if you can make it work. No, I mean, I've before this whole thing happened, I've laid out this whole thing months ahead. Here, COVID low, rallied up. This decline right there was coming for a soft landing, sucker rally, call it as a recession. So this is the same diagonal, three-way bounce, down, then five down in C, in two, right? That's a COVID low. Soft landing, sucker rally, call it as a recession. So what happened here? Exactly the same thing. This was a completed five-way move. And then the way the price started to come, because when I started looking at this price right there, because like, first of all, the price has so much price overlap. It doesn't have a look of this. Yeah, this is like a trend that established back to the upside. Or even to the downside. You see like how sharp the downside move is. So this is a five-way move. This is what the COVID low was at 2191. When I started looking at days after, this is the daily time frame. It took me some time, and I was like, because the price just has too much overlap. Every time when you have overlap coming down, like this, it's always a diagonal. Because diagonals are very choppy, and it gives you a huge bounces as well. But they're very difficult to trade because there's a bunch of zigzag moves. And then once the diagonal completes, you know that your first target always going to be a fourth wave. Okay, this is the most, if you spot a diagonal has the most easiest profit target that you can set to the upside. It's always going to be a prior fourth wave. Okay. Whenever the diagonal completes, you the three-way bounce that you're gonna have back toward, because diagonals always forms in wave A and wave or wave one. It's a five-wave move, right? It's always gonna be a wave four, and then it's gonna be a B, and then you expect another five down. So there's basically a zigzag, five, three, and five. So now is the same thing from here, COVID low, five, three. Then we have three ends here, which is, you see look what happens here. Three versus A, which I originally had, which was a week ago or so, was here. The reason why I was keeping this third wave here because of the 261.8, because the third wave 3.1, sorry, 3 versus 1 was 161.8 was 51.26, 200% was here, and then 6160 was a 261.8. I was under the impression thinking like, okay, fine, with this third ends here. This blue right there will buy some time. And then from here, we'll look for this one more push into this fifth wave back to the upside is to complete the one. If that would happen, at one point, if you ask me, I'm much happier now at one point, even the fact, yes, a little bit, it is a little bit of a painful that we're just going through this thing right now, instead of holding this four here, then get the push and then come down in two. You know, I'd rather do it now and just get done with it, because this is gonna come. I have no doubt that it's not gonna. This is what? It's just a matter of like how much time the second wave is gonna take. If this, if whatever the bottom forms here, if we're gonna see this, which we're gonna track every single day, as you know that, like this, it's gonna take time because these are daily bars. Keep that thing in mind. One single day is one single bar. I had them all shrinked right now. This is gonna be a one of a lifetime opportunities like this. Whatever off the lows. This is can change your life. Because right now, if we just simply go like this, upside trigger is 78.6 at 58.99. It was a 6,000 before. You know when you break 78.6 what happens. You know, in order to go back to the new highs, we need S&P now has to break 5,900. It was 6,000 before. Now we're gonna make low, the number is gonna drop. If we come down to the 5,000, then which is that 78.6 that I'm talking about, it's gonna drop down to 58.71. I mean, it's a long way to go, right? Yeah, the upside of this market in the next, what, 3 quarters, we can, whatever, the would be a four, um, eight more months for this price to, you can, well, the high we all know is 61.47, but in the next couple months, where, I mean, depends where the low is, then we can just leave the way it is. But we don't know when the low is going to form and when we're going to have this eight swings off the low is to call this complete correction to be completed. It will complete, but the only thing that you know, um, instead of calling an ABC, or we just go into some sort of a nasty complex, that's a different thing. We don't know that, you know? We can just go as this is like called A of a W, which is a zigzag here, connector X, then take another Y down, which we don't know there. We have to measure all those um, moves. Wave 2 can come back down here. Whatever, it's just a matter of like how is this second wave is gonna go. Now if we take, you cannot, because this is a smaller degree compared to a higher degree, you know? So if you wanna, it's just a 1 year really doesn't, not gonna change much. Where's my, let's my, if you just simply measure the time manually, I got 195 bars from this high to this low. I think I stopped them here. And I'm blind. What happened? Okay. Yeah, 195. But it's not gonna work because this is a one higher degree. You're not gonna, time relationship is not gonna, look how much time is gonna throw you off if you just compare 195 side by side. Yeah. Put you at what, September? It's gonna be a little challenging and choppy year, if you ask me. A lot of people would, the only thing which can happen is the price to make either a V-shaped recovery back to the upside if he backs off from his policies, or is going to be a U-shape. U-shape takes longer on time duration compared to a V-shape. V-shape is much faster recovery back to the upside. So market always make these two shapes, the toward back to the highs. V shapes has a much W. Yeah, yeah, you can do a W. W it takes longer. It takes time as well because you have the fastest one is always V. Okay, V shape recovery is always the fastest one. The covers it really fast. We just we're just gonna be we're in the environment right now is that we don't have any clear answers and we can never get anything out of the White House. Nobody can. People who are working there are probably confused. Who is my boss? What is he even doing every single day? And it just we just all have to get used to it. This is just the beginning, you know. He's only in for 3 months. We'll have 4 more years to deal with them. And it's going to be the same thing. Every day is something. For the last 4 years, we don't have that much. We don't had a president sitting tweeting like he does. You just have to keep that. That's where the risk can take a serious hit. You don't have a Biden or Obama sitting tweeting about the stock market or about like who he's gonna attack and which country he's going after and this and that. I mean, it just the his administration is very, very different. And look, and market, look what market is doing. So it's a tough environment to to play with him in the market, to be honest, because it's just he could he can do something over the weekend. The market can gap up on Monday, and then by Tuesday or Wednesday, he's gonna send something else and just gonna reverse right back down. That's the way he is. He's always gonna tweet when Dow is gonna make a new all-time high. Right away, he's gonna. Well, now he's watching the market. Oh, you see, I told you your 401k is gonna go through the roof, and here Dow is making new all-time high, all because of me. Now market is going down. Oh, market will be fine. It's good. It's going to be fine for long term. That's their comment. It's going to be fine for long term. There's nothing else to say. What else are they going to say? We had a beautiful run, and we did really well. And now it's just a matter of taking a bit of a punishment because we're entering into this correction now that is actually starting to move against the trend. It's the same thing here. Five waves up, three down, five up. What do we expect? Three down. So is this going to be a simple ABC the way we have, or are we going to deal with? It doesn't matter if we do an ABC or WXY. I can count them both ways, so it really doesn't matter. I like to keep them both ways, and then whichever fits right, and then I can change those labels back on a higher time frame. You know, so this is a 30. So it just this way I would have a. But I tried. I watched this one because I tried counting this thing as five, but you just cannot fit them because if you do this, because I know a lot of guys out, you can do this five. Sorry, you can do this as a five-way move down. Make this thing as a one, two. It's very hard to count this thing as a three. So you can come down in a five, up in two. Where are you gonna land your three here? You have an overlap here. So if you put a three here, you don't have five here within this. You just gotta squeeze them. I mean, I can make it work somehow. Again, it doesn't not every wave count has to be a perfect, almost to the perfection. I mean, there's some concession like make you move it around a little bit. Nobody's sitting here judging or taking pictures. Just a measured move, like it really. If I can do this, it it really doesn't make a difference, to be honest. Corrections are corrections. If this is a five, it would be like this. This is a third wave. The bounce that we're gonna have is gonna be in the fourth wave that would measure this move. That will give us one more push back to the downside to complete five waves of C. If you want to make a case of a motive wave. Okay, corrections are very tricky. So I can run the same thing, but I know how it can happen on a C wave. It is a C wave, as you can see it. Okay. On a zigzag, so you have five, three, and five, right? It should say like, okay, fine, I can dip another one here. Like, okay, I can call this thing as a Y wave. Now I have a three-wave ABC down and Y. Now, if you're going to change this thing to an A, B, and C, so now this becomes 1, this becomes 2, this is 3. Whatever the 4 is going to happen here, then gives you one more push down in 5, then it will complete a motive wave. That will be an ABC move. So if this is going to be all of the correction here, then the price has to form 5 to the upside, 3 to the downside, and whatever the low is going to happen is going to have to hold. And then from here, we look for a third wave. Then we'll go as a 1, 2, 3, and then same 4, and then 5, so on and on. So we can do all this. That's not a problem. Elliott is not a problem. It doesn't it doesn't give me any runaround. I can do this thing in a matter of seconds. So I'm leaving it like this for now, and we'll see what happens because I can only adjust it based on how the day is going, and then I can't I can't call bottoms. They're very tough. Those are very tough calls. So this is what I had originally. Oh, good thing. Glad I didn't change it. This what I had before. 1, 2, up and 3. See this third wave, I kept them right there at 261.8. Now I moved it down here. So this is what I mean, who knows? This could be a fourth wave that we're in. Glad I didn't delete this thing yesterday. So I can keep them. Who knows? This could be a fourth wave. It just has a very good time relationship yesterday. This bar right. Look at this, 100% perfect time relationship. Yesterday, right there. This daily bar is right there on time and price. The whole bar is right on the line as of yesterday. It's a 100% relationship of this. Right here. So the last time, that was the low. The next day is when the time was completed. And then from there, the price started to resume back to the upside. It did make another low as well. But not, that was the low right there. So this time was off by 1 day. Okay. This one, as of yesterday, is when we completed that time of that 100% right there. See what's going on? Man, a little bit shaky right there. This whole daily bar is right on the line. So, well, we'll see what happens. I can't. Time is time. That's fine, but time doesn't define any lows. It can give you a pretty good hint on a time relationship, and they work a lot of time. They work if you have the wave count labeled right. You're not gonna your time is not gonna work for you if you have labels flying around everywhere. Could be, could be. I mean, because the thing is this. Now, let's say this is the fourth wave, right? So we had 1, 2, 3 versus 1, which is at 6160, right up at third wave. Sorry, at the 3 versus 1 was right there. And this is the fourth. The fourth relationship is still good. It's not invalidated yet. Keep that thing in mind. Because 4 versus 3, 23.6 at 38.2, which is 5120. We're like sitting almost right there. So the 100% relationship, was 55.80, 4 versus 2. So the distance travel here in 2 was the same exact distance travel here in 4 versus 2 is 55.80. So we did this, right? But the price, this is the time, okay? So for I don't know how many days it has been because we're coming down like so the price, this is the time. Now it's completed. Okay, it's always either or. Okay, because we all know the price is gonna come down. Is gonna come down in a much faster pace, right? We all know that. And then the recovery always takes a bit longer time and is gonna take a couple shakeout, this, and this probably resume back to the upside. We all know that, which is fine. So we'll see what happens. I just want to see how we open next week and how we trade a day or two to see because this was perfect. You see right here, 100, 38, 33. That's the time. Look how perfectly it matched. I mean, if you like, I mean, you don't have to like open up a crazy size position or something, but like if you like buy something small, say like, you know what, screw it. I'll buy something a year out lead based on just this because I have time, price, and time relationship met here. We can just target the previous high of this range. I mean, it's a good return. Nobody knows this, you know. It's just the point of like, okay, if you have five and then you have three down and you're trying to take out this high right there, that's a hell of a move to the upside. This is very advanced, Elliot. Is some of the stuff is gonna go over your head. So it took me a long time to practice and learn all this, but it could all move. I mean, if you put a two here, if you start counting, it's not gonna match. Everything will move. So you should know exactly how to count first. Then the time will work. You can't just sit and hope for these time relationship to play out for you and your wave count is going all over the place. you know so we'll see. I mean we'll keep this one will be 1 2 1 2 3 4 5, or we'll just keep this instead of this blue. Instead of keeping it here, we'll keep it here because you can count five here. You see, 1 2 1 2 3 4 5. This is more than 100%, the less than 161.8, which is fine. Three-wave decline here because this is a pretty, huge impulsive move here. I had him at diagonal. I mean, this is the best you can do it. But from here is this. So I'm gonna keep an eye on both. So it really doesn't matter if this is gonna be much um, great. I mean, this is a very aggressive wave count in the coming months. Keep that thing in mind. This is a very aggressive wave count over this. So this one will suggest there's a one more push back to the upside after completing this. Then you come back down. Because the thing is this. This is what I just want to show you one thing here. Market crashes happened in COVID that everybody is what is watching right now is what? Here's COVID right there. Here's a 2022. Okay. If you just look at a blank chart, what do you like? Okay, then if you want to go into an Elliott route, make it more advanced, like, okay, I want to label all this thing, fine. Or you can just keep them as a swing here. Make it a little simple. Swing will do all the work for you instead of you figuring out is a fourth wave or the fifth wave or third or this and this. Swing will do all the work for you. Okay. So if we take the COVID low and take 4818 and project it here from the COVID low, sorry, the 2022 low, look where we stopped. This top right there, which is what, 100% relationship right there, which was 6118 and the all-time high is 6147. This is like a measured moves. COVID low, 2022 high to the low, 100% time the price relationship is this. Now if you take it, just I hate myself that I didn't do this thing before. I literally hate myself, to be honest. Because more and more, like, it's always like, when like you're wrong on few trades and then if the market is going against you, is when you like sometime like really dig, and this is when I just really focus just to measure and look at every single swing going back to see how where is the prices reversing and why they're reversing. I don't had this answer before. I wish I did. But now if you take, so this is the 100% relationship of the COVID low. Now you take this high, if you take 2022 low to this high of that 4818 that we're talking about, look at 200% fib, 6145. Look at the high, 6147. Crazy how fibs work, huh? How the market has such a perfect relationship with price. So we have a 100% relationship of the COVID low. Again, I didn't did all this. I was like, I'll just show you on the video. Because 200 is a very strong fib. I know that. 200 and 261.8. These two fibs are a very strong fib after 161.8. Market, every price is gonna back off from these fibs one way or another. Either it's gonna get hit at 200 first, or it's gonna definitely is gonna hit with 261.8. You're not gonna break the break to 261.8 without any sort of a bounce or a correction back to the downside, to the upside. Same thing to the downside when you're coming down. Even the fact you do come down pretty fast, but you're gonna price is gonna try to take a pause at the 261.8 because every indicator you're gonna look at him at 261.8 is gonna be either overbought or is gonna be oversold. I can guarantee you this thing. Pull any indicator at 261.8, I will show you. This is exactly where the market just backed off from 200% fib off this swing from this high to low swing and 100% relationship of the COVID low. This is why I changed this thing yesterday. I was like, this is not gonna work. I have a I mean, it could, but I just don't see this. It just doesn't fit with the keeping a third here. This is what I had, three versus one. I was like, okay, we're gonna chop around here in a fourth wave, not turning into a bear market. That's why I laid out this one yesterday. I was like, just gotta go with this route. I have no other choice. And well, a fourth wave this is valid. I mean, this much it has this much room, okay, for this fourth wave to breathe. You don't want to see a fourth wave starting to dip below 50%. It's gonna becomes too big against against this two. It's almost there. Well, you have to look at this way. More and more the price develops to the upside, this thing's gonna start looking small and funny because the lot of time has passed. Okay, I mean, if you when the more price data is gonna collect back to the upside in the next 2 3 years, this entire move right there is gonna start to look like this as well. Keep that thing in mind. The price, it shrinks over time because the more and more data is coming in. Orange 4. Oh no, it cannot be an orange 4 because if you take the COVID low, put a 1 here, 2 here, and then you try to put 3 here, your threes will become very, very short. Okay. The For the wave count for this orange 3 to work, it has to go to 76, 75 minimum. Yeah, you cannot have a shorter wave 3. No way. I will never do that because I know the wave count never gonna work. So if you take this measured move projected here from this bear market low, and your 100% relationship is 76, 75. So, and with this third wave, and that you need to fit 5 waves within this three. So you have to go 1, 2, and then 1, 2, 3. Three has to have another 5 within 3, then 4, and then another 5 back to the upside. No, not from here. No, it did not pass. No. For the if you go like this, here 2191 to 4818 down to 3491. If you measure this move projected from here, 100% relationship is this. Okay, so it's all here labeled. So computer is gonna do it for you. That's the low right there. That's the high. That's the COVID low. Yeah, I doubt. I mean, I'm gonna keep this one, and I'm gonna keep an eye on it. But if this is a fourth wave, let's think it is, okay? It's gonna give you a same support anyways as what you see in here in wave two. So it really doesn't make a big difference. What do you think comes after 4? 5, right? What do you think comes after 2? 3. So it really doesn't make a difference if this goes up in 5 or if we start moving up in the third. So both ways you have an upside in play, right? So both counts are I'm not, we're gonna keep this one. I just wanted to see how that, you never know, the time relationship might, the come into a play. If the wave count is valid, don't need to throw it away. I mean, I always have this. against this. It's just a matter of, do we complete a five-way move, or do we have one more push back to the upside? That's the only those are the only two scenarios that we're just gonna keep them side by side. So it really doesn't matter. Comes wave five to complete one, or we already completed this one. Okay. So if I do this, then I have to change this the same way. One of the October lows down in two. Two has five completed waves within three, four, five, one. So now this one and the S&P matches side by side. And that's exactly what we want. We don't want one wave count going in one direction, the other one doesn't. It is always better to have a same matching wave count. It's going to make it much easier to analyze the market to see what we can expect, where we have, because they're going to work side by side. Because for now, this one right there, it's a 100% flat correction. A, B here, C here. So if I have to go in A, B, C here, that's why I'm trying to make a same case here. So I left them like this last night. Now they have they now they match. So if you would ask me, because I'm looking at a bunch of things as well, if you ask me, this is what looking at this, um, the ranges, because I pay attention to, I pay a lot of attention to these ranges. Okay, a lot of time you can, because I have my fibs, which is fine. Lot of time these ranges can give you a very good bottom. Okay, and I'm not that really good in picking tops. I've nailed a lot of bottoms. So I'll find it. I have to just put a bunch of things together. I'll find the floor. I can make a certain zone right there with multiple fib, where the cluster of fibs stacks. And then I can just look at couple ranges and stuff and see what the swings are. I can figure out a bottom. It's just, but it's not easy, but it's worth of a try. Yeah, picking tops is tough. So 11% range, looking at the previous ones here, I think we're pretty damn close. It might just hit 5,000 on Monday and that's it. Just try to get a bit of a bump. But the point is, you have to keep that thing in mind. In April, any bounce that we will have will come. It's going to be an oversold bounce, of course, because everything is down to record lows now. Every indicator is like literally bleeding right now, along with prices. So any bounces that we have, okay, will be these ones that you see right there. This one just basically the body of the candle just gonna shrink up to the upside. It's just, but the point is, in the end, it's not gonna turn green anymore. The April month is done. It's gonna close down. It's just a matter of like how much of a recovery this the this month will manage to recover off the lows, because the high is here, the low is here, right? So what is left now? The close. That's it. Well, we don't. Well, we know the high because we already break below the previous month. Now the thing is where the low is. We don't know that, but it'll come. Don't worry. I'm much better off buying something around here than paying something heavy prices here. When prices are coming down, well, the low is not in. Well, nobody knows where the lows are. If all these years, if I know all these prices lows are, you think I'll be still sitting here? I need to work on the NDX. Okay, so this is the one I left at yesterday because I don't do much Elliott, man, during the market hour, especially now with this the sky is falling every single day. I just gotta spend some time. I'll have it, then I'll post it. Yeah, I like to keep them um, side by side. I mean, looking at this, I mean, it's just a freaking disaster. Yesterday we got a bounce right there from 176.71. So we closed at what 181 kind of, So we're right here. I mean, yeah, you don't 78.6, not a joke. I always every time when I show you a 78.6 on a wave count or a swing, you need to watch that print like a hawk. Okay? Always. Because you want to defend the previous low based off this fib. So just always pay attention to 78.6. Every time when I will adjust a wave count or whatever I do, when you see 78.6, just watch that print. If the price comes back down, hit that mark. It can come down another point or two, it doesn't matter. But watch that area, okay? Because this is a very strong fib. So I always call them as a last resort. So we have IWM sitting here. I mean, this works off this low right there. It's the same three wave. This is just, it has a double top. So you have a three waves here. I managed to count five, wave one, two, up in three. See near the 261.8. Fourth wave was kind of like a little goofy kind of long one compared to the two. Two one was like simple 161.8. And then from here, I did the same thing, which is the same diagonal here, which gives you the same diagonal here, and it gives you the same diagonal here. Okay. Well, I know the IWM is way behind compared to this one, but at least, it's I I could keep the sucker into the same second wave like I did on SPX and on the diamond. So this one here, um, and then I would work on Qs. I'll see if I can set down. Then this one will have four sets all side by side into this 1 2 1 2, into a 1 2 count. So at one point I would really like it because this way I would have pretty much all four going in the same direction and giving me a same picture, you know? And then we just gotta go day by day and see how the price goes because these are daily bars. So keep that thing in mind. This is one day for one single bar. So it's good. This is gonna take a long time. So we'll see what happens. Here's Tesla right there. Um, I mean, 217 is the low as we all know. I mean, we can easily count five down in A, B. This is the fourth wave, so we'll be watching 231. Watch this one. That's the one that I will be watching. So same thing with the flat. You have an A, one, two, three, four, five. Down A, up in B, five decline here to complete a C wave. So you have one, two, three, and four, and five. So then from here, this better holds, and then to see if the price recovers off this toward this, and I don't see this thing happening until earnings. If this breaks, which is it's a very good zone, we can swing a trade here on Tesla, to be honest. If it turns around, that'll be a nice recovery back to the upside. So we're gonna be watching this zone really closely. That's next week. The market is under pressure. Tesla is not gonna run on its own. You know that. No stock is gonna get a break when this kind of a steep sell-off. You don't expect that Tesla is gonna keep ripping to the upside. So we'll keep an eye on this one. Um, Sector-wise, somebody was asking me about. I did. Dow. This is a Dow. Well, I don't have the index, but this is the ETF, DIA. These are called diamonds. This is exactly the same thing. If you just want, I mean, if you just want to pull up an index and just copy the same labels, the way it is here is going to be exactly the same thing. Maybe I would have a SPY, or if I would have an SPX, I would do the same thing. Sector, where the heck it went? Rotation wise, energy got hit hard yesterday. Look, technology right there. See, it's gonna reverse because it has not made it here. Because, well, at the same time, you have to keep in mind the rotation does not gonna give you a very perfect landscape either when you have a massive flush out in the market. You know, it's moving, I can see it, but at the same time, when you're looking at stocks, they're all down. I mean, I don't know which um a stock that you can expect is going to rally when you had a market down like 2,000 points. Come on. We all know that. I mean, communication right there has just literally sitting right at the benchmark. That's when we have the Meta, Google, and Netflix. The rest of them are, you see, healthcare right there looks like it's trying to refuse to go in toward this lagging quadrant to see if it's trying to make a form a hook back to the upside. Consumer staple did. See, it just came back down here, just made a full reversal back here. Industrials are under pressure. Materials are starting to turn around. So does utilities. But not the financial. Financials are weakening here. Communications sitting close to the benchmark. Technology, this is where is the one the market is really taking a hit. Look at all these sectors and where technology is going. It's just, and look at this sucker right there. So you have a Tesla and Amazon and all the other retailers. Even the fact that it's selling off, but look where the rotation is showing. So rotation sometimes can be a little tricky because the thing is this with tariffs, the only sector that is gonna be under pressure with all these tariffs is gonna be this. Because every retail stores are all here. This is scary. This is a tough one to spend. We can go back here on the XLY. I have a full list where I went. Where's XLY? Here's all the XLY stocks. They're all here. Jeez. Garmin, look at the size of this weekly bar. What kind of any news came out of the stock? Wow, crazy. So these are all the XLY stocks. Tesla is leading the pack. And we have Newell, VF Corp. These are the ones in the 40 range year to date. They're already down. No region right there. PVH, Las Vegas. Like you see, like these are all the heavy ones. It's Amazon right there. Marriott 23, Expedia, Nike, Ralph Lauren right there. So these are the stocks that are just getting taken a hit and the XLY. And which one are the ones that are leading? Dollar General, O'Reilly, AutoZone, Yum Brand, Domino Pizza, McDonald's, barely up. This restaurant, TGX, eBay flat, Genuine Part, and Costco is flat. So you have 3, 4, 5, 6, 7, 8, 9, 10, 11, like almost like 10, 11 stocks. Everything else is down. So this is, Home Depot, like all of these retailers are Ulta Beauty and Wynn Resorts, Expedia, they're all here in this sector. Here's a Lululemon here down 31, Best Buy 30, Estee Lauder 30, Target 30, Advanced Auto Part. Now look at the difference between Advanced Auto Part compared to O'Reilly and AutoZone. It's just a very weak company. Even the fact they sell the same parts. So if everybody's saying things, saying like, well, the tariffs is going to come, is going to hit, and this, the used car market is going to rally. People's going to start buying more used parts and stuff to maintain their used cars. I mean, yeah, it looks like people are more leaning toward the O'Reilly, which is $1,489 stock, and even AutoZone, which is $3,653 stock. Yeah, so those are not definitely cheap. To you gotta pump some crazy money to buy this kind of an expensive share to catch a 10, 15, 20% return. Um, I mean, I'm looking at these, but the overall sector is just under pressure. Weekly, Home Depot ended the week with an outside bar. I mean, it's just a outside bar on low as well. These are the Home Depot and Lowe's that go pretty much side by side, like a Starbucks. And any company is gonna have Chinese exposure is the one is gonna take a hit on any China news. That's just a pure fact. Any company is gonna have an exposure in China is gonna take the most punishment. Any Chinese news. At MGM, Ralph Lauren, look, 2 weeks in a row. Yeah, they're probably making their stuff in China as well. Here's Chipotle. And we got out at 52. Look at the high, 52.32. We had a huge reversal week on Chipotle. I didn't really trade much this week, as you all know that. I had Russell, which I closed. Glad I did. So I closed that one. Then I closed Chipotle, and that's it. And I opened a position on Spy. That's pretty much about it. That one is down with the yesterday. Surprise. I didn't really trade much. I'm just like trying to analyze the market. It's like I'm not dying to throw trades to on the board. Every time I try to, then yesterday I opened Uber. I like Uber is, I've been watching this stock for 2 months, over 2 weeks. you know, and we'll see what happens here from here. Because I've been this price was sitting. I'm just this looks like a triangle. Um, the resistance right now is going to be at 69. So I did a 65-70 spread. Um, and then we'll see how it plays out. Got time. And here we have a trend line support here. The it does looks like um, a pretty good triangle. But, I mean, at the same time, triangle takes a damn long time and just a bunch of back and forth move. So this E wave, I mean, according to the rules, okay, of an Elliott wave, triangles are, remember, always forms in wave four of a trend wave. It cannot be formed anywhere else because your corrective waves are wave four and wave two. Wave two, you cannot have a triangle in wave two. It only forms in wave four. So if this is a triangle, looks like one, and if this is an E wave, this is where the E wave is to find support right there in this area. So if we take a simple measured move of an A, B, and C, 100% zigzag was at a 65.54. And then this is 61.8, which is 65.87 is sitting here. Then you have a 78.6 sitting here as well. So this 2 point zone here for this Uber, it should be able to find some support along this trend line as well. So this is why I was gonna give a shot. I was like, okay, fine. We finally got an initial push to the downside and see if this area could hold and price trying to make a move back higher. That's the trade setup that I have. So, um, but this E wave, technically, according to the rules, has to stay above C wave. It's the same thing. This D wave it needs to stay below the B wave. C wave must stay above A wave low. You see, because this is a contracting triangle, a symmetrical triangle, would you call it? So we'll see what happens here and see if we can Uber can make his way back up. That'd be nice against this invalidation. So if this if the price managed to come back down and hit this invalidation mark here, this triangle is no longer valid. Okay, because E wave cannot retrace below C. So what we will do in that time, and then we just have to turn this whole thing into a complex. Okay, that's where it's gonna be. So basically, what you're gonna be looking, because this C wave is going to extend to the downside, so it's gonna become into a Y wave. So for this triangle to hold, it must stay above 59.33. Otherwise, the triangle is no longer valid. So that's the trade setup, and I'll I'll swing a trade here and see how it plays out. It's a good risk to reward. See if we can price can recover back from here. I mean, my market's gonna move. Stock's gonna get it. All these stocks gonna get a breather. Come on, they're losing some insane money as well, market wise. So, um, rotation wise, like you already took a hold. Like some of them are turning back down. I wouldn't. This is a scary one to touch. To be honest, this sector right there with high inflation, because these stores, like, you know. Now the other one, if you want to look at those consumer staple, the defensive sector, those are the low ATR plays. Um, we could go through those. Okay, let's see which one is leading the pack. Well, Walgreens 14, just range bound Coke. I did the same here, the 52 weeks high and a 52 weeks low. I mean, stock is an uptrend, upswing right now. It's a very small third swing to the upside compared to this one. I mean, it's pulling back. It pulled back pretty sharp yesterday. Needs to stay above 68 low for this for this third swing. I mean, the core just have not that much. That's an outside bar there. Whoa, at the highs. Kroger for a huge outside daily bar yesterday on right at the low, up at the high. It's on a seventh swing as well. Monster beverages. So this is a defensive sector, as you can see how the stock got hit yesterday. Nobody was safe yesterday. If anybody thinks like, yeah, I'm gonna take my money and put it there because I want to go defensive. Yeah, look all these stocks, all these daily Altria group here, seven. Look at that, Dr. Pepper, KDA. I had a trade last year. It was a really good trade on this one. Look at the size of this outside reversal bar. Kimberly Clark, they got hit hard. Like defensive got hit hard yesterday. This is, I don't know, man. It's just like such a controlled selling. It's just like they kind of know like where people is gonna run with where they're gonna pull the money out and where they're gonna go, and just hit that sector as well at the same time. Look at that. All these outside bars. Church and Dwight right there. Colgate. Celsius. It just made a barely. It made a recovery after beating of such a huge beating. Philip Morris. It made some nasty reversals yesterday, this defensive sector. Which one is this kind of consumer staples? Mondelez right there. Yeah, which one is this? Okay. Um, the beer right there. Right into the zones. Well, Tyson Food. I mean, look at this. That's a huge spill for all the spicy spices. All fell off the shelf. So the 81.62 was the high of yesterday. And then it closed at 76.28. Costco stock is confused. Look what this cost, how Costco traded in the last 5 days this week. Outside day, higher day, outside day, lower. It's five. Was watching. Costco is just trying to settle into the second swing. Is what I'm planning to short this stock for sure. This sucker is 55 times earning trading right now. Yeah, I'm gonna target this downside on this one. I'm looking for this 1,000 print. I'm watching this because it's coming off from this 15 swing. First of all, okay, it was very very high. So it's down in one. Now it's trying to settle in two. Once it's gonna go in two, it's gonna be have three. That's why I am looking to short this stock. We'll take a put spread. I was really hoping this thing is gonna get tagged here, but it didn't. So I'm just gonna give some time. This is coming off from 15 down in one because it took out this low right there. Now it's trying to get one push right there in the second swing, and then we're gonna short this and see if we can target this 880 area. Be 900 and kind of like put spread to the downside will be nice. We'll see. Might get hit on earnings. Never know. Hormel Ford outside day. You see, like Procter Gamble. Look at this. People want to go defensive yesterday, huh? No, so well, how did that play out? Kraft, like these nasty bars. Look at Pepsi, Hershey, Brown Forman, Archer Daniel. So that was a 52 weeks low. Walmart down in one as well. Yeah, it's just. I mean, we can go material if you want. I mean, I've had these material. What do we have here? Good. Nothing except for Newmont. That's the only. What's going on here? Oh, I have those lines here. Really? Yeah. This would be good on this pullback. Newmont. Very, it's a very strong stock compared to all the other ones. Material, the last time I traded that one was a while. This was, I think, this one. Man, what a freaking grind that was. Such a. What, you see all these ATR? One. And you don't find much alpha in these stocks. This is a huge company. The what is it? Lindy. It's a huge material company. Nasty no-go bar. Newmont, Ecolab. This is a little expensive. We can, this is the one you can find something like anything into this 5, 10 plus. Sherwin Williams, outside weekly bar. Mosaic. Oh man, straight decline. That's a weekly here, that's the daily here. I always look here first before I look there. Downswings. APD coming down in one. This is a huge company here. It's a 1-2 swing now. International paper is coming off from a 7 swing. Not really good setups, man. This one, love to buy. This is a good one. Consider this ball. It has a down swing, but it's a 1-2 swing. This is something to consider. Got right at 78.6 now. Expected move is 61 point, 61 price to the upside. Well, it's going to take several weeks. This is something to keep an eye on. Because what I see here is a pretty nice diagonal here. See? Some sort of an ending diagonal here. low here, low here, and low here. So this basically is making lower highs and lower lows. But if we connect this, see, it's trying to form like a ending diagonal. So, so the 7, 8.6 better hold. I mean, it's just such a low ATR play. 48, 50, 51, 50. I mean, if this is a diagonal, your minimum up, your minimum upside target is this anyways. 55. So it's going to be your minimum upside target, 55, prior fourth wave. Remember, I always talk about it. So this setup is good, but at the same time, you got to size the hell out of this trade to make money on it, you know? So what the other thing that I like about is the rotation. You see like how it's trying to turn. It didn't push toward the lagging quadrant. So momentum is there for this stock. You see it was coming down here, weakening quadrant into this right there. And then for a couple days, you see now it's trying to form a hook right back toward the. So this thing can revert right there, 7, 8.6 as well. I mean, if you, we can take a shot on Monday, roll a ball on a material stock. See how the 7, 8.6 holds against the rotation and target the 55 print. But 55, we don't even have ATR that is going to 55. Sucker only moved like a little over a 1 point a day. So what do we do? 50, 50, 55, 50, 55 call spread. Psh, it's gonna be, I don't even know how many months it's gonna take for this for for uh for price to climb back up there. I mean, the only other thing is just to hit a 50 strike. Just buy calls on 50 and just leave it. I don't know the option chain. I don't even know the liquidity on this. Rotation looks good. Setup looks good. 7, 8.6 is there. Needs to hold. Not bad. I mean, hey, the stock option market is pricing in a 3 point move. Oh, these ones had those monthly options anyways. This stock doesn't have, I'm looking at my phone, doesn't have those weekly options. Well, the next expiration for the option is on 16 May, which is 41 days out. So 41 days out, you have a 5.8% expected move. So 5.8 from 48 plus 5. I mean, yeah, that puts you right back to this close to that 55 number. So 41 days, 50. Well, 50 has some. How much is this premium? $2.05. 50 calls. 1,072 open interest. $2 premium. 41 days out. Could do a spread 50-55. Be much cheaper. 50-55 5 point spread for the 41 days. That just exactly gives you the expected move for the next 41 days anyways, up or down. Make a note on this one, Bob. Remind me on Monday as well. I can put a trade on 5 point. We can do a five point play. Um, internationals. This side like some of these rotations are. This is the only one that I would consider right there. This setup is the only one looks good. Rest of them are DuPont, Dow. What is this? Nucor. All pushing toward the lagging quadrant. Man, this is crazy. What's happening? What is going on? That's right. There's all these Chinese companies, huh? Some crazy hit. This is a weekly time frame. Just wow. It's a complete flush out. Weeks and weeks of recovery. It just yeah, I'd feel it was such a beautiful inverse head and shoulder pattern here. Look at this. Wow. That's when you take them right on your chin. Beautiful. This, inverse head and shoulder, well balanced volume here. That's what I always look for. Just two equal sides, just to have enough volume on both sides. Two shoulders here with a neckline. Oh boy. I think I traded this one last year, DuPont. FMC near the 52 weeks low. Seal there. Yeah, there are these are Chinese plays, man. Seriously, these are all Chinese stocks. It's getting hit hard after this Chinese tariffs. Consumer staples you already did, material, real estate. What the I think the real estate is okay. Down 4.20%. Oh no. Okay, let's go through here and see which sector, because XOK, okay, down monthly bar. Consumer staples down for 4 months in a row now with the lower lows, which is this XLY. Okay. This is the one that probably due for a bounce, because if we go back, I think I looked at it yesterday. If we go back, look at 3 months here, three down months here, three down months here, three down months here. Every time after 3 down months, this sucker pops. So if we would hunt, because now the problem is that we have a lot of earnings. XLY is where we have Amazon and Tesla is sitting as a leader. Okay. This is the one that's under pressure right now because of all the tariffs, right? But making a bet for this one for a relief rally based off this, even we consider this as and when it was in a bear market, The sucker popped after 3 months of beating. So if that's the case, XLY, the leaders are Tesla and Amazon. Those two are the ones that are going to drive the sector up. So, well, I mean, we track Tesla all the time, anyways, but Tesla earnings will come first before Amazon. And plus, this month still has a long way to go.
So can you go over Amazon then?
Yeah, Amazon, yeah, we can go through it. Amazon, let's do this. Oh, there you go. Yeah, baby, right there. You see, it's 8.6. I wouldn't be this bottom right there is either is either there or is gonna probably gonna form on Monday for a bounce. This is right there, 8.6. It could poke another point or two. That's not the deal, but we gotta watch this 8.6 on 181. Okay. It's a very, very strong fib. A lot of time the bounces happens here. Industrial, 3, 4, 5 months. This one didn't even have a single higher bar for 5 months. Communication. See, April is toast. Okay, it just any time, like anything we're gonna play is gonna be the bounce that we can play. Because all of these monthly bars are down. Financials down. Energy. Oh my God. Look at the energy. Jeez. Oh, energy took out last week low as well. Oh, energy is done for this year. Mm-mm. It could bounce and stuff. Sorry, this is a monthly bar. It's not gonna, I was gonna confuse myself with a yearly. I was like, no, boy. Oh, no. No, it's right because this is the year low of last year. What I'm talking about. A monthly bar has nothing to do with the previous high and low. This is a one single bar for 1 year. So this is 70, 78, 98, 78, 76. Yeah, so it took out a last week low. So your yearly bar, there you go, is red. The energy is done for this year. I knew it before. He's gonna kill the energy. He's entertaining all these Saudis at Mar-a-Lago right now. You know that, right? Over the weekend, some sort of a Saudi golf tournament that he's running. He's hanging out with the Saudis and stuff. But what kind of a deal this guy is making there? You know, OPEC is we all know what they can do and to the oil prices. The central bank of oil, material, lower yearly pot as well. Man, yeah, this year just real estate is okay. Yeah, I would go this route right there. It's very tough to make a case here. You know, this is the way to go. The second wave right there, we might don't make a new high. We just might end up somewhere around here in a B wave. just because it's going to take a lot of time. Because recovery always takes time. It's just look how it's much, when you look at them and when you label them, yeah, I can just throw a one, two, like, how much time it is? You just have to position yourself based off like how the price will starting to unfold to the upside and just option premiums, and how many flat days we're gonna have, the choppy days, those 10, 15 point range days. Market just not gonna trend every single day. I mean, now it's moving because of the volatility is high. I mean, it's gonna take a pause and yeah, those count those days as well, those inside days, those those weak full chop, like nothing really is moving much. Yeah, this is if I have to make a call, I know I usually don't do it, but I would have a much better picture in the mid-year when when the 6 months pass, the 2 quarters. Then you can make a really good case for the second half of the year because the first half of the year is when when the Russell 2000 has a rebalancing as well, I believe in June. And then a mid-year from there, then you can expect like, okay, you know what? I can run time relationships and things like this. I have a pretty good idea where the year will end. Have the second half. But the first half right now, to me, is looks completely rough. We all know that. But the other half, what I would think is just going to be a recovery mode. If that recovery will have enough strength, that could take us right back to the highs. But at the same time, if we factor a slow growth, lower GDP, okay, that is already starting to price in, and a recession, looming recession. I mean, it's tough to keep a wave count in wave four if I factored these three things: a recession, a slow growth, and these damn freaking tariffs with that could trigger inflation. And nobody knows what those numbers are going to be anyways, or how they calculate and how much they're going to show. But is right now, as of looking at yesterday, because yesterday market doesn't really care about a good job report. So I don't even know if it's going to care much about the inflation report because it's all about tariffs now. So which the tariffs there which is taking effect now, how long it will take for these prices that people start realizing like, hey, you know what? I went to a store, the prices start going up back again. Then the consumer price index is the one is gonna show. That takes time. The data that needs to collect on a monthly basis, consumer price index, to see if that's starting to go up. If that's starting to go up, is gonna that is not good. Then that's the effect of those tariffs now. That is coming to hit the consumer price index. That's a mess. It's definitely a mess. It's just a corrective rally after a massive, huge run off the lows. And hey, no complaints. We did really well. But just time to stay a little bit neutral, to be honest. You know, Buying a dip, especially with options and a high premium, is not the way right now. It's just because you're paying more, and then after that, you just then the volatility is gonna come off. You just what your premium is gonna do. You end up you already paid the price buying such a high premiums. Yeah, so just I'll see. I mean, we're gonna figure it out. It's not a big, not a rocket science. Not the first time or the last time we been through their hair. It's not like time will pass. Time will pass. It's just it needs to run its just that there's so much negative out there versus positive. What is a positive sign right now? I mean, hope for earnings to come up strong. I mean, the odds are very low because looking at monthly bars, it's that they're all down for the month. So April, which was considered as the second strongest month. Here, look at this. Oops. Look at this. April is the second strongest month of the year since 1975 after November. And now it is the worst month of the year, you know? But this is the first quarter. So January is strong, fine. We had positive January. Then we have February down, March down, and April down. This is what I was saying yesterday as well. I said like if we buy the dips on April, it's gonna pay off in May because I have three down um, months. So now if we can go back to, I look at all these things because it's not gonna change this last year. It's not gonna change because it's falling a current year. I can do it weekly. I mean, that's about it. That's just the way the week goes. I'd rather just keep them here as a week because month is already know. To fit some room here. Come on, baby. Small. Yeah. It's a month up there. That's why I can always blow it up. Um, Communication down. I mean, they're all this financial down month, energy down, material down, real estate down, healthcare down, utilities made an outside bar. Consumer staple is almost there. It's by a penny off. Yeah, this month is toast, you know? This month is definitely toast. Yeah, monthly bar is just not gonna it's not gonna turn green unless we just made a monster reversal in the next 3 weeks. That's the different story. But I don't know what the odds are, you know? My bet right now, if we manage to find a floor and if we do manage to get a bounce, 54.77 would be the number right now that I would try to hit. Like these yellow prints. I post these ones every day as you all know that. So any time when you're trying to look to the upside, thinking like where would be the next upside target that I can set on my charts or I can look for where the price would make a recovery back to the upside is this yellow prints. That's it. And I can adjust the wave count from there. That's if we find the damn floor, which we will. which we will. Yeah, this month is just looking at. Okay, so here's the thing. You see this highlighted part right there? This is a recession tool. Okay. These were the months that as the market was in the economy was in a recession. So here it lasted 2 months. But this is the highlighted area. This one lasted longer. This is when this is the Optima has this they call um, the recession tool, which I connected with this data NBER. So this one was we can go back only 2 months. This one here down in 2009 was quite a bit, and it took a long like this is where we get out of the recession right here. So it started on January of 2028 and it lasts until June of 2009. This is when we get out of the recession. So this is the tool that Optima has that collects the data for, all the data, like how long is the BTC. I don't know, Bitcoin, it's a different animal, to be honest. I was pretty surprised to see, man, Bitcoin held really good yesterday. You know, here's a recession here. 1, 2, 3, 4, 5, 6, 7, 8 months. We get out of the recession, we end up even going back even lower. And for this whole, and the next year was all the way down after the recession, or 2021, 2001, 2020, 2020. See how little the market used to move compare like how market moves now. You see the difference? Look at these ranges like over the last like 15, 20 years. How much of the actual market used to move? These are exact high and lows for those years. And look how market has become. And now we have people comparing this to 1929. Bunch of idiots. It just like look at all these small ranges. These are like hardly any volatility, and back in 2004, I started here in 2006. That's when I started trading. So I experienced this. Okay. That was not fun. This is what I started somewhere around here, if I remember, around like in May or June, right around here. That's I get myself into a currency market first, start trading Forex, and then I started learning about, markets. So I rode a ship from this part as somewhere around here, is either May or June or summer, somewhere around here. And this is what I've been have experienced ever since. You can see it here on the chart. Oh boy. Right here. So this is my trading journey.
No. So, so what?
This is my trading journey has been from here to here as of yesterday close. I mean, been through a hell of a time and trades and like market turns over. It just, and then every time when you look at them, after every drawdown, market ends up making a new high every single time. But any punishment that comes in here that hurts. And I'm not gonna lie, of course it hurts. Losses always hurts. It makes you mad and gives you 10 different thoughts in your head every single day. Do you really want to do this because you're losing money and this and well, you have to look at this way. It is not in our hands, right? We just we had such a steady run, and even the fact we did have few down months here, but we don't have this kind of a craziness what this from this administration. Even the fact that we had a bear market here in 2022, that was a very slow dip, if you notice, because you can, this is just the one single bar. We can see it here, how it comes down here. It accelerates here, but look how the choppy decline was. Because that was a diagonal. Very difficult to trade. But that was right there. I don't know. I would be watching 5,000 really close next month, next week, to be honest. I could expect next month the price will recover, make a, but it's just not, it's just a matter of this April has to close, and then we have a long way to go because we have so many earnings are coming out, and and this is a month to buy dips, and those dips are not going to be cheap because what those are the dips is going to comes with a very expensive premiums. Just remember that, okay? Because S&P 500, I've studied this thing for a long time, and I pay really good attention to it. You see right here? You see right here? It's 3 and 3. That's the pop right there for next month. You don't see it. This is too, you don't go large cap index, especially S&P 500 is gonna be very, you're not gonna see 4. I don't think so. 2, 2, 1, 1. Lot more greens than red for sure. Yeah, this is a dip buying month. But that dip buying month, man, it's just freaking crazy. Look, 3. That's the COVID right there. 3, 2, 2, 2. Here went 4. 2011. 5, as a matter of fact. What the hell happened in 2011? 1, 2, 3, 4, 5. 2, 3, 5, 3, 4, 4, 3. You see how you can, if you look at these things, what you can, data has a very lot of information, but you just have to learn how to study it. You can make a really good trades based on the time projection. You're looking ahead, right? If I buy something for the next 6 months, let's say, or 3 months, okay, in a down market, can I pull up a positive month? You know, so it gives you a lot of clues. And the price is price, which we can always analyze with swings and the wave count, where we can find entry on a fib support. That's when we have this fibs comes into a play. But data is very important. I don't know if the worst case right now is for S&P is to completely reverse the course of last year, which is 4682. If that happens, that means that we're just gonna have an outside year. And if you're gonna put up an outside year on a very top, that could he's not gonna have much fun in the market for the next couple of years. I will tell you that. But these are scary bars up on a very top of the chart. I know that. Yeah, throw some hedges, of course. I love to get a bit of a bounce if we can just. I mean, the only thing is this, okay? I mean, downside, what we have 78.6 right at 5,000. 5,000, if that goes, so does the year. But the price can stop anywhere, it will bounce. I mean, come on, there's no such a thing goes in a straight line. You all know that, right? I mean, it's just right now, what the priority is right now is to find a damn floor. Once we will have a floor where the selling will take a pause, is where we can expect a bounce. Unless if people get lucky on a gap up at the open, that's a different thing. Okay, but this is a pretty sharp decline to the downside, but it's just a matter of like how much of this price is gonna shrink to the upside, which we just looked at them here. 54.77. This is the mid this is the bounce. But I don't know we don't know the floor. God damn, if I can nail the $500 move, 500-point move in S&P, shit, I won't even trade anything for next month. You know, that's a lot. Is to catch a 500-point move on a one single trade. Wow. I will, buddy. Give me some time. I'm gonna have to look at several things. I'll find it. I mean, um, that's what I'm saying. I mean, if I would go with the man, if look, a lot of time it happens that the bottom forms, and you're not gonna even see that bottom for the next 2, 3 years. It's like this, you know. The top will come back, but the bottom is always like this. Some of these bottoms are just what gives you one-time opportunity to get in, and nobody knows where it is, and man, it just you can proud of yourself and say like, hey, you know what? I bought a low. It's not easy, but it's it's always a worth of a try. You have to risk something to make it. I mean, if you're just gonna be sitting all, yeah, I mean, everybody's happy to pay 6,000, but nobody wants to buy 5,000. You know, Well, I would love to buy it here. If that didn't play out, doesn't mean that market is not gonna ever gonna recover or it's gonna go back up. He's gonna pump the market at some point. He will. It's just a matter of what he's doing. Just nobody knows. That's just a tough guy. I mean, people willing to bet on him that he is gonna turn everything around. Now the people cussing at him day and night. Imagine waking up in the morning. I woke up, or you woke, or you all woke up earlier, right? Imagine you open your eyes and you just like, okay, here I'm starting my day, and you think the freaking half the world hates me. How would you feel? I would feel horrible if I were thinking like I had hundreds of people cussing at me every single day. I mean, come on, man. I mean, imagine that. But cannot please everyone, man. Just all it is. I don't know, man. I mean, if I go, this is the route I would go, and just hold and see if this 8.6, most likely. I looked at them yesterday because I was at after the close. I was like, we're right there. I said like I think it's gonna that would push to 12.26, right to this numbers, you know. This is where I'll be. I mean, if the price will come down to this price, to this zone right there, 8.6, I will definitely try to swing some calls, see if we can try to catch you know, um, a bounce or whatever. Yeah, we'll definitely buy something at 8.6. Very, very strong fib. Yeah, I mean, it could poke another 15, 20, 30 points to the downside. Doesn't mean anything. But it's going to be oversold market now, being at 8 RSI, and daily is pretty hit hard, and the weekly as well. This is going to be the bounce area, the oversold. That's how I see it. You don't think that you're just going to slice through it here. I don't know. I mean, I don't think so. Nah, I don't think so. We'll see what happens. We're very close. The range will meet with 8.6 with an overcooked like over sold market. That should give us the bounce for the next week or two. I would My target upside, if you would ask me, 54.77. That's it. Whatever the floor is. I mean, if it's gonna keep pushing lower and lower, I mean, that number will start, it's coming down a little bit more. But we're gonna keep an eye on it. We'll see how much of this yellow number is gonna move. That's the upside target. That's it. This one is gonna have a resistance right there at the previous swing low, 407. By the time, I think another day or two, so 407 on this one. Yeah, there you go. Dude, this guy just has everything lined up with these dates. My favorite dictionary word. He just how I was listening yesterday. It was like, is tariffs. Tariffs. Wow. It's his favorite dictionary word is tariff. He's talking about him on a speech, telling people. True, we can say that. 4,800, yeah, but number is gonna drop. But I don't think, the thing we can make a case like like a 48, which is right there, but you don't right there is this 48 mark. You're not gonna slice through this that easily. How I see it. There's one thing in my trading career that I learned and I mastered, that is fibs. And you know how good I am with fibs. I know how fibs work. And it just, I mean, again, like anything can happen. This just only happened yesterday, okay, which is the same exact 78.6 on IWM. That doesn't mean, it like is going to start a new uptrend. Anything can happen, but it's going to take time because we're taking a serious beating to the downside. But the point is this, that how does the price respond when it comes and hit this area? It comes and hit this fib. Okay? That's what it is. What happens here? 61.8, 100%. Here's your 100. It doesn't mean it's gonna hit them at the penny and then it's just gonna reverse its course. You see it dip down here, and then what happened? Look at this upside. Full reversal from here to here. Nobody knows that is gonna happen, but that's not the point. The point is to see where is the possible potential downside where you have. It's the same thing like when I make wave count, I'll show you a cluster of fib resistance up, like the cluster of fibs to the upside. But they call those stacks of fibs that's trying to stack with each other. I know which ones are strong ones and where the market you know, was going to having a hard time breaking that zone. So that's why I always look for a downside zone and upside zone. So like, okay, I'm going to try to see if I can run them through a different swing, high and lows. If either I run from here to here, I run this one from here, I can just do it from multiple ways to see like, okay, where I can form a cluster of support where I could see like, okay, the price will come down here, might take a pause and see what happens. Okay, so it's the same the thing I'm doing here. This is my zone right here. Okay, on Uber. So what I have is ABC move here 100%, 78.6 is 63.80. So it's a 2-point zone. Okay, on Uber. 78 points is a very strong fib, right? We all know that. 100% relationship of this swing right there. So this is a one zone along with 61.8. So you have a stack of these three. Now we're gonna have to wait and see if the price managed to hold it and see if it can try to make its way out of it a couple days. And then we have this along with connecting this low to this low to this low. So yeah, there is a little poke, another point and a half move that we might come and touch the line. That's possible as well. But the point is to see like, okay, where I would see that I have that where I can see a potential zone that I can build. That's what it is. So that's the trade. That's you'd say like, okay, fine. Then you apply your Elliott wave rule, thinking like, okay, yes, triangulation has a clear invalidation at the C low. There's my zone that I can consider to buy and to find an entry and see if the price can finally make its way out. I have a big, huge gap up here up on the top as well, but who knows when the gap's gonna get filled, and see if the price makes its way out. That's the trade. It's just taking it on a one single um, um, a fib price right there. It just becomes a little bit. But the point is just watch the 78.6. That's all. So I always tell you. You see what happens, because if you starting to break this apart here, your next low is this. It's just 161. So the 161 right there, that would put IWM down to 34% off the highs. I don't think so. I mean, I don't know. I mean, anything is possible, but looking at 34% move on a ETF that tracks 2,000 stocks is just kind of, I would just go like this, to be honest. Triple move. I mean, you can go WXY if you want, but if you're gonna do a Y here, you still need a three subdivision. I would rather just leave it like this. But we'll see. That's my pocket window right there. 52, 90, 44, 60. Oh, damn, at 52, 44. But yeah, but they have a third strike as well. There's not a just not regular spread. That's what I was looking for. This area right there to hold next week for a bounce to this 5 MA, which is like a roughly like a 70, 56, 70 point window. That is literally put you at 12 as well with this. But we're just doing it when we have so much time left in this month as well. So whatever you call it shrinkage is gonna happen here with that candle is this is what the bounce is. That's it. Never know. This bounce right there to me, I mean, if we would have a really nice aggressive move to the upside, this is that would be the reasonable target right there, to be honest. Right there, 54.88, which matches with that five for now. I don't know how much time is gonna chew now for then the thing is gonna start coming down. That's the last month low was 54.88. We can do a butterfly or a diagonal spread is gonna be expensive. It's not gonna. I could like tilt the spread to the upside, but diagonal spreads are expensive. It just doesn't. It just all depends on the delta, but your diagonals is if you're gonna buy something like you can just do like 51 and 51 50 like 50,000 like sorry the 51 and 5105 or 5110 like a 10 point diagonal a spread. Try to manage to play the May, but that diagonal is gonna cost almost like 6 7 grand, but it's gonna only gonna give you like 5 6 deltas. You know, it's gonna have a positive theta for sure, but diagonals are expensive. I'll see if I would make a butterfly, tilt the butterfly up. If I would do the April earnings and then May, that's next month. Next month is May, January, March, April, May, June. June, you can do July. But butterfly is cheap. I mean, right now I gotta have to price one out.
So, Mo, are you really sure that you want to do that before earnings?
One I can do a one contract S&P. It's okay. It's not gonna have much deltas though. At the same time, if you were to ask me, I would just set up a butter like either a, but this just not gonna work because well, there's too. I would do like a calendar spread right at the 5,000 mark. I don't know. If you ask me, I don't know. I'm just laying out. If you, I think this 5,000 number is just gonna become some sort of a pivot zone for an S&P. The reason why I'm saying is because market has spent a lot of time at 6,000, back and forth to the 6,000 mark. Because the last time we spent almost 3 months at 5,000 mark. So made a move here, came back to this 5,000. Sorry, the only 1 month we just came back and retested after this move here. Because this is the 78.6 that would, which I just showed you as well. I can show you how different the price is price. It doesn't matter. It's just a matter of like which favor is gonna hit and what kind of a respond do you get. I mean, I don't know. I mean, do so the point is like, is it smart now to sell a market which is down to completely oversold territory? Because if that option to buy puts on an oversold market where you have 100% implied volatility, which is fully priced into a market, when if it's going to come off, if the market is going to bounce at least 50, 60, 70 points, those premiums going to get hurt a lot. Keep that thing in mind. Everything sounds and looks too good to be true unless you have the actual premium moving and working on a market that is moving like wild. They want to make you buy something, add the money, pay full price for the premium, and then after that, when the price comes off, is when you can expect like, yeah, I can expect that's kind of a, because these bounces are good, but you have a freaking Vega that's sitting on your head as well. You know, time decay is different. We all know that. It's just the passage of time. Fine, but Vega is the one that it's punishing these premiums on top of this, the implied volatility. This is just which is fully priced in. So 78.6, well, I mean, that's looking at this. I mean, I really like spending more time into these bigger time frames, to be honest. Just cut so much noise. It's the same. So at 50, 69, 69 points, give or take 70 points. What is 70 points? The 5 minute candle. The way this thing is coming, that's crazy. So if I would go back here, let's see, because this is the one that I'm tracking. This. If we would make a case here for an ABC off the highs, okay, we're gonna need this. Let's do this. 30-minute chart. Let's do a simple ABC move. Okay. Let's see where we can. 100% is here. Okay. 161.8 sitting at 48.37. So let's turn this thing. So if this is an A, this is B, close to that 50%. 100% relationship was right there. And how much time that is gonna take to C versus A zigzag. The C versus A zigzag, the time duration is here, which is April 8 by 3 o'clock by the close for this. Okay. So we can just leave it like this for now. Come on. Get rid of
Yeah,
it.
that's the day. That's the day before reciprocal tariff takes into effect.
So now we're gonna, okay, so now we're gonna draw a channel. Okay, so we can make this just a little bit here. We can make your ABC. Doesn't matter. So we're just gonna have to see how we're gonna come down. So now if this is a C, so we need 5 waves in C. Okay. So in the 5 wave in C, so we're gonna go like this. So we're gonna come down in A, 1 as in 5 down. Now we're gonna count 3. Man, this motor wave is just crazy. So this one, so the 100% relationship with time has already met, right? The C versus A zigzag is April 8 at 3 o'clock. Okay, so we're gonna leave that one the way it is. Now what we're gonna do is we're gonna see like, okay, if this is a C, if it's a C wave, it's an actionary wave. It always has to be a 5 smaller waves. So now we're gonna see like, okay, we have 5 down, 3 up, 2 versus 1 near the 78.6, which is fine. You have 8 swings here, and now we have this third one. Now we do 3 versus 1. The 3 versus 1, okay, is what? 200% relationship, 51.29. So we were trying to bounce from here, managed to close down here. Here comes your 261.8, which is 49.66. Okay. The level that I'm talking about, if this one comes in here, is not, this is where the third will come into an end, somewhere around here. Okay. That gives us a bounce here in a fourth. The invalidation right there is going to go right here to this wave 1 low, which is 54.88. Okay. So exactly the 54.88 number we've been talking about on the 5 MA, which is sitting right there. Now we're going to draw our resistance, which is always going to be a prior, the low of the initial dip right there becomes 55. Okay. So any recovery, which is going to be right back to the 55 off the lows, that's going to be, it's going to be the minimum. So this is our result. That will basically fill the false gap. Now, what do we have here? Now we have a price that has a throwover from the channel. Okay, that's one thing. Now it's coming down here in 3. We can do 3 versus, it's not going to work much. Because downside is always going to be much faster. So now we're going to do this. So I'm going to leave this one it is. And now we're going to count You should not be doing this on a smaller time frame. It's not easy. Well, I show it to you. You know, I don't really spend much time on these because these are very small. These micro the subwaves, they're they can change really fast. Okay, so now we're gonna turn this thing into a blue because we need 5 to complete 3, right? It's invalidation here at 1. Prior support will become a resistance on the way up. We have an overthrow time relationship, and then we have 3 versus 1, 51.29 and 49.66, right? So we have this zone for this third wave. And now within this third, we need to have 5 smaller waves to complete this third, right? So now in this third, we're going to do the same 3 versus 1, where we have 61.8. We're right there of this C versus 1. At 200 is at 49.57 of this smaller wave of this higher degree wave. Okay. You see how the cluster is starting to form now? That's how you make clusters, the downside support. So how do you see it now that, okay, so you have 3 versus 1 here, 3 versus 1 here of one higher degree and a smaller degree. Okay. So what are my zones now? This is your first zone between these two, and this is a second zone here. If this holds, okay, so you get this some sort of a bounce in and 4, come back and return. It could be ended here already. We don't know that. Okay, it's totally possible that this just ended here like this. And now from here, the third goes here, and then you look for this fourth wave. But that's not the point right now. The point is to see where we will have the positive session because we have a negative sessions. So we're just going to go back here because those can all change. So we just keep the way it is because the price will stay the way they are. It's not going to move, right? So your job is not to sit and keep changing this thing over and over. You have your zone. Just leave the way the price is. Let the price comes back down and retest it. It'll give you the answer. You know a 3 versus 1 can be 1.6. It's a typical retracement is 161.8, you know. And then you have a 200% of a 1 higher degree and 261.8. You just leave the way it is. Okay. Now you got a time clock running here on you by the April 8th of this entire initial decline. Okay. So you land your 5th wave, but the price is already, is where the time will click. The price is already there. It's just a matter of completing a time. So to complete this 5 waves now, either you get a bounce here on this sort of a 4th wave, then you take 1 more 5th, then you get this 4th wave. This 4th wave right there, I don't know where the low is. Then you go 4 versus 2, and then you go 4 versus 3. So 4 versus 2 and 4 versus 3 are those what? I don't know. I'm just doing it from this low. 23.6, 38.2, 58%, 100% in relationship of wave 2. That's what we call 4 versus 2. Distance travel in wave 2 is an equal distance travel in wave 3. 4. There's going to be a minimum upside of 4 versus 2. And the 4 versus 3 run in fib retracement from year 2, not from this very high. They call 4 versus 3. The third wave you're looking for a retracement, 23.6, 38.2, and 50% retracement. So that's where the 4th wave is normally starting to breathe against this 2nd wave, and 4th wave has a relationship. So this is where the 4th wave will come into a play. That gives one more push down, complete a fifth wave with this time. That's how I see it, is to complete this. Then you will have A, B, and C. Now, smaller time frame can change. Okay, it's not easy to run a wave count on 15, 20, 30 minutes wave count. These are very tough because they can change really fast. And Elliott wave is not designed or has been written or is for day trades or scalping trades. This theory doesn't work for day trading. Um, Elliott wave comes to work in these time frames. That's when Elliott wave is going to come into a play. You know, a moves like, you see, like something that you could like forecast, make the whole like it to plays out over time. This is the beauty where the Elliott is going to come into a play. Not on a smaller time frame. It just becomes very messy because these are much bigger, higher time frame. So it takes some time, and then what was the see at this time I took this um, high, and this is the the um, the high of the COVID. Okay, let's go back here and test this one out. When we went back, so here's COVID low. Okay, because what I wanted to see is that how less, because it's going to give you a pretty good idea here, is this is the COVID low. We made a recovery back here. So what we're going to do is we're going to focus on these two things. This decline, this is the bear market, right? And this bear market. And these are the upside move that we have. And now we're doing the same thing coming down. Like, well, call it a bear market. I guess right now that's what the news is everywhere, that that we have bear market now. So that's the COVID. That's the 2022 low. These are the 2 years of upside. That's the reversal on the same year because the year was started here, went all the way down, made a move back all the way back here to 3760. So that was the COVID reversal. So what I wanted to see is this. Now let's figure out how much of a retracement did we get after 2 year run. That's what it is. That's what the bear market is, right? So we have 27 here. We know that 27% was the actual move. Okay. The decline was of the 2022 bear market. So now what you can do is you can draw your fibs from this high to this low. Okay. And then we'll see that basically looks like it's a 50% retracement. It's a 50% retracement, almost to the penny. You know my point. You know what I'm trying. I hope you understand my point. The point is this is the COVID low, right? And then market has a recovered. Market recovered for 2 years all the way up till here. Okay, so it was a 2 year run. That 2 year run turned into with the outside reversal bar here up at the very top. It turned into a bear market, right? We don't know it's going to go into a 27%. It can, the way it's coming down. The thing is, looks like it's going to zero. The point here is like you have a low here to this high, and then we had a bear market that started. Where was the low of the bear market that time? That's a 50% retracement from the COVID low. Now we're going to do the same thing here. Okay. Now we're going to run a same scenario. Take this high to this bear market low. Okay. So we're just measuring two bear market lows because you're going to try to find a relationship to see like, okay, now where is our 50% retracement is? 48.19. Right there. So this test right there, because this is the major support of 48.18 right here, which is the peak of the 2022 bear market. Now, this is a major support of 48.18, 38.2%, which is 2 versus 1, which is at 49.52. The year high and low, 78.6, is at 5,000. Okay, let's mark this one here. So we have 5,000 here. 49.95 to be exact. So we have 4995 here. So that's a 78.6 on a yearly bar. 38.2, which is 49.52, which is 2 versus 1. 161.8, which is 48.39. Major support here, this is the zone, is for this price might come and test them. Okay. So then we go back to this picture. This is a clear third wave here. This is going to be the bounce. And the fourth wave is going to come is where the volatility is going to come off. And it's going to give one initial push to the downside is to complete 5 waves in this C. Once you will have a completed 5 waves, you will have an ABC bounce to the upside every single time. Okay? After every 5-way move. If this isn't a 5, I mean, call it a 5. I'm going to have to work on it to see if I can fit 5 in here. That's your 3-way bounce right there. So you have 10.45% decline, 5.12% recovery. So you have 12.39% decline versus 2. This is going to be the 4th wave bounce. Now remember, the monthly bar is already lower, right? So we already know that it's not turning green for this month. It's just a matter of where do we find the when do we complete a 5th wave, the 5 waves to the downside to complete this C wave. That's exactly how I see it. This is why I'm going to leave this zone right there. We're not that far anyways. We're almost there. You know, and on top of it, we have a very oversold market. So now we do the same thing. We take A, 1, 2, 3. So what do we do? 3 versus 1. There you go. You see the stack is how much these fibs are starting to stacken up. I mean, they're a little bit apart. I mean, because the range is pretty wide. I try to get them as close as possible. Now we don't know is gonna come and hit them to the penny or it might not. It can stop right there and it can just, whatever this third is gonna end, we're gonna project this fourth to the upside. Now let's say for a second that I'll leave this one here. This is why I have these different air zone, this one and this one. I have a pretty good idea. So now we're going to have to see like, okay, well, I don't know what the low is. So we're going to do the same thing here. Now this 4th wave is not going to be an easy one to trade, as you all know that. So these are not That's going to be upside. If the price stops here, 52.11, 52.60, 53, 53.73. So the invalidation right now is here. I mean, call it like somewhere around here because you don't want to have fourth wave going too much above 50%. It's going to become too big. So this is the case. So now the question is, where is this third is about to end? Either it's going to hit here to this 49.95 that we're talking about. That is the 78.6 that I'm keep mentioning. That will then you see like it was gonna drop these fibs lower as well. So that will be the 4 versus 2, 51.83. Then you have 23 point and 38.2. So this will be the upside zone. God, who knows how this fourth wave is gonna go? It could be a freaking triangle, some bunch of that BS. Fourth is never gonna be the easy one. Then from here, the one push down here just to come and retest the lows. Or you can just have a bit of a bounce here and a shallow looking fifth wave. Anything can happen. But now the thing is, now the initial decline is here. Oops. Where's my channel? Here. So we take this high to this low, to this high right there. So we connected this high to this high, and then you just project it all the way like this here to this low. Okay. And now you're going to lock this thing. Now you're not going to move this channel. Leave the channel the way it is, because once the price will make a mean reversion, it's going to come right back inside the channel. Okay. There. So you just lock it. Either it's going to give you a channel resistance, and then it's trying to see if the price is going to try to consolidate and make its way in, but it will make its way in. But this is what we're going to track. So we're just going to leave the way it is. I don't have to project the fourth right now. Leave the way it is. For now, what we're going to do is we're going to leave our 3 versus 1 against the 49.95, which is the 78.6. Then we have 49.52, which is 2 versus 1, along with 49.58. So we're like 100 points, give or take, which is nothing. Right there near this massive cluster of zone fibs, 49.95, 49.50 along with 49.52. So this zone, I wouldn't even go and highlight that deep down. I would just leave the way this. You're not cracking 21.6 that easily on a daily time frame. You see the same 261.8 here. Same fib, 261.8. This was a 5 plus 3 plus versus 1. Yeah, you're not gonna break this one, not S&P. Yeah, I mean, of course. Think and drag, but I mean, I would if I would leave things like this for now. Again, this is a daily time frame, so each day is going to be a 1 bar. Okay, I wouldn't even entertain this. This is, I have a very, very high confidence that if the price comes back down here in this zone, it's gonna bounce really strong. Right there. If this third ends here, market will chew the entire month of April in this fourth wave with earnings against this, because this is a 5% move. So whatever the initial decline that we have right now this is where the entire earnings season is going to come into a play now. Full back and forth stuff. Nobody knows how this thing is going to go. Either we just take a dip back in the same April to retest the to complete this fifth wave, because there will be couple surprises with Mag 7 on earnings. Not all Mag 7 stocks is going to pass the test with the flying colors. Some of them is going to fail. So one of these ones will come. This is how I see it. This earnings season, after this dip right there where the market is completely oversold right now, is to give the relief bounce back in this fourth wave. Then after that, this some of these earnings just to complete this. This is where I see this whole entire April is coming into end. That's the story of April. I can fit in with this wave count. Then from here, once this thing completes, then we'll look for an ABC bounce. That's going to happen after every 5 waves, anyways. That's the story going to be for May. Just as a start. If this starting to turns into a 5-way move to the upside, yeah, then we're going to have a very, very high confidence that that's just the low there, and then we should be, this thing can turn back to the upside. But that's not the point right now. The point is to see where we are now, what we can make out of it for the next couple weeks, where we could, what we can expect for the next. So basically, what you can expect right now is that price can most likely after a decline, it might go into a corrective phase, because the fourth wave is a counter trend trade, right? If it happens to complete 5 waves, you're still gonna have a 3-wave correction to that considers a correction wave as well. You see? So let's see what happens. But this is what let's watch this. Okay? I can nail Elliott wave really good if I spend too much time. Like if I spend a lot of time, which I don't. I don't have time for this. Um, but Elliott wave works really good. Just that's the later case. I'm not worried about. Worried about that part. That's how I see it. Because these acceleration gaps is a 100% third wave. That's I am 100% positive about that. No acceleration gaps happens back to back on any other forms of wave, except a C wave or a third wave. Those are the ones that moves really fast. So that is how I would see things. This 48, which is not that much. So we're right here. I mean, 5%. Because last time, it's very interesting to see. Last time, the COVID low was almost to the penny. 34.91, 35.05. And then from there, the price started to recover back to the upside. It took months, but it just made a full. This is COVID. This is 2022, and then it just made a full U shape. This was actually a cup and handle, anyways, not a U shape. You just take this to this as your breakout. I remember posting this thing on a Twitter as well. It's like we were long good last year. Plus, we were breaking out that triple top anyways. Remember the 3 years of a triple, like it's like, look at this high, and this high. And you have people on Twitter telling the market crash is coming. I was like, are you serious? You when the market has ever topped with three tops, where? Show me. This is what I see it all the time. I was like, this market is just breaking out. I made a lot of freaking money last year. I'm not gonna lie. I made a lot of money this last year. It's just I'm just like sitting and thinking. I was like, geez, we're good. We haven't even taken out any of these years highs yet. I was like, then that's where the AI boom came last year. That's it. That was just market just needed some sort of a pump. That's it. There goes your triple top. It's very like an easy year to be a bullish last year. So we have, I said like monthly, or if you look at a yearly, doesn't matter. But when you look at this time frame and you're looking at three tops here and you have this bar closing above, and look at the size of this one, I was like, we'll go. That's it. Let's go. Then I mean, people like, oh, you a perma bull and you always bullish and this and this. I was like, well, I have a reason to be bullish. Every wave count that I've been posting on my but I try to keep you here all along as well. And I was posting stuff on Twitter as well. Thomas, like just stay long. There's a lot of things that I watch and I just like I don't really like address it or lay it out like why I'm doing well. I don't know the reasons of why, but I just trade what I see. You have a large cap here. You didn't even take out, like you just taken out a 3 years of high. It's like, what do you think? You're just gonna make a little high right here and you're gonna fail? No, you already made three attempts. You couldn't break. You're gonna break the fourth time. It's a very easy year last year to be a bullish, to be honest. 5% is a downside move right there. That's the most I would. This starting to make, and with the wave count pretty good. This we have a little bit more pain, but the recovery can definitely will come back into a play because volatility is not staying up for months. Get that thing out of your head if that's what you think. The market just stay volatile for the next 2 3 months straight in a row. No, the volatility which is fully priced in is gonna come off. You'll see the 100% number that I've been telling you is gonna cut in half really fast. Um, it, yeah, I showed you the top, and try to show you the bottom. This five. I mean, if I think this 5% window down here in this is the something to lay it like to put a risk up on it to the upside. It's always like this. When there's negativity, it's the same thing here. Everything is bad, just what this and my. But the only difference between this and this one, sorry, this one, this one has a pace of like this, right? The reason why is because the we don't when we had these dips right there in 2022, we don't had a 2022 point drawdowns on the market. Remember? This market right now is coming back down like a COVID style, not like this. This is why the RSI of right now um, is sitting at right at the low of this one, eight, whatever, eight and a half. So the pace of this decline is is much great. Like I wouldn't say greater, is much faster decline. Compared to this one. This was a slow drip. It's like sinking Titanic. Like slowly, like market just finally just keep pushing down with the higher inflation. It's a crazy looking candle, man. This well, just gonna leave it there for now. See how we yeah, I mean that's the plan. I mean we can yeah, third is all of it. I mean look, third can stop anywhere. It can come and hit it to the 200 is was 51.23. Looks like we didn't really took a pause here at all. This is where we ended the session yesterday. So the third one can come down. It can stop anywhere. I mean, you can come back down here to 49.95. It can come and hit this 49.58, 38.2, which is we don't know that, but that's how we build our zone. Is where we see like where do we have a cluster of fibs starting to stack close to each other. You see like how close they are. That's how you build your zone. See, like, okay, is the price gonna come down here? No, it's not necessary. We don't. I don't know that. It can just stop here. Then we're starting to form this fifth. Then we come down in fifth, like this. That can happen as well. But if I know that where every price will stop and where it's gonna go and stuff, that will make you guys fucking millionaire in 2 months. It's not. It's this. You look for a price to respond. That's why I always try to use yellow and a green zone. Yellow is where we trying to find our entries to see where we can find a potential support. Green is the areas we're trying to hit as a target. That's it. That's how I trade. Where the price is gonna go 6 months from now or next year, I care less. I'm a technician. My job is to analyze price and the market and just to play support and resistance. That's all I do. If market is gonna go up here, it has to pass several hurdles and it's gonna pass some of those fibs that I'm gonna show you to the upside. Then we can make the case that we're starting to see higher highs and higher lows. We're not making higher highs and higher lows right now, anyways. This is a liquidation phase of the market. This is the low, higher low, lower low, higher low. Sorry, lower high. These are all lower highs and lower lows. So definitely, I mean, well, we have a 20% drawdown. I mean, things changed really, really fast. 17.52% off the highs. If I do this, let me make a, so we have this, these other ones. So we have a 78.6 coming off from here, 48.18 from those two previous bear market. 46.82 is the last year low. Yeah. I don't mean this test can come into a play, but I doubt it. I doubt if this thing is gonna clear this one that easily. This 49.95 area, that's the one I wanted to watch. It's what you're gonna watch as well. This this 59.69. It's like a 60, 65 point window. Watch this area really, really close. See what happens here. That doesn't mean, I mean, if it's gonna give you a bounce, the bounce is bounce. That doesn't mean you still need a higher bar, for the price to start trending higher. All we're doing right now is trying to see where we can find a bargain price. A bargain price where the price can take a pause might form the bottom. Okay, that's the question mark right now. We don't know what the bottom is. Nobody knows that. This sucker can come all the way down here. We don't know that. When you're talking 5,000, it could be 4,000 in a couple months. We just simply don't know. But we need to build our bridges, but kind of see like, okay, which bridge is going to survive that we be able to walk, and which one is going to burn down. That's what we're going to do. That's the way I see it. I don't, I don't know. Are you expecting about a 50% crash in a market over this tariffs? It's a totally different thing. Was not if the market is gonna have a 50% crash now, I don't think it's gonna happen all in one single month. Have you ever seen I mean, this one was 30 because of the COVID. That's 16.20. I mean, we can look at some of them, 11, 11. Which one is the extreme ones? 15.74, 16. That's all 1 month. 26, 28. So some of them go can go nuts. This is where the rest. Well, I don't know what happened here. The this is the uh, the housing bubble, Lehman collapse, right here. I remember that. Crazy morning. You wake up and man, I was like, somebody's like playing a freaking video game or something. Like I turn the TV on and I'm like, currency market is upside down. I was like, what the hell is going on? This was crazy. Plus, there was no even Twitter or Facebook around that time. I was using what's that Signal, some charting software. It was a very new one of the e-Signal. They still have it. They're still around. I always have advanced charts. This one. They upgrade them pretty e-charts. They're a very old company. I remember. I know that. This is um I don't know how much. That time we had a free charting software from Forex.com because they had a contract with them. So if you open up a Forex account, they give you the e-signal. So we were using, I was using the e-signal. That's how I learned Elliott, all on this. But that time was all manually, you know. So I don't even know how much the I don't need them. I mean, I have motive waves way more advanced. Oh, this is 35 a month, 173 a month for 12 months, 2080 total. Yeah, it's a 2000. I don't know how much this used to be very plain, simple charting. So you're talking 15 plus years ago. Technology, everything's so moved. But I went Motive Wave is way much better. If you have interest in Elliott, yeah, you gotta go spend $2,000. If you don't, just don't spend it. Um, stop the recording.